The time for you to worry is 50 years from now, when all the money in the world is Bitcoin, when Bitcoin is 450 trillion and it's worth, go figure, $50 million a coin, and then the currency of the country you live in is backed by Bitcoin, then you might see that what'll happen? The more likely thing is that currency, the whatever yo-yo dollar, will be pegged to Bitcoin, and then someone will take over the government and said, hey, we're going off the Bitcoin standard.
Bitcoin is already a dominant force in the world of digital assets. But what if I told you that this is just the beginning? In fact, the real shift is yet to come, and it's going to change the way we view money, power, and currency itself. Let's talk about what's on the horizon for Bitcoin and why it's time to take action now, especially when it comes to accumulating XRP.
And so think of Bitcoin as Manhattan in cyberspace. There's a lot of other places you can live. There's a lot of other cities than Manhattan. And there's a lot of other businesses. I don't think that the liquidity or the capital that's being invested in meme coins is going to either drive the Bitcoin bull run, or it's threatening. It's kind of like, is Manhattan threatened by what goes on in Vegas?
When Michael Saylor speaks about Bitcoin, it's no ordinary endorsement. As the founder and former CEO of MicroStrategy, Saylor has turned his software company into something far beyond a traditional enterprise. MicroStrategy's Bitcoin holdings are worth over $21 billion, making it the company with the largest amount of Bitcoin in the world, surpassing even the US and Chinese governments. This aggressive Bitcoin strategy started in 2020, and now Saylor has an even bolder vision: a $42 billion Bitcoin buying plan over the next 3 years.
Frick, Andrew Mellon, they didn't buy art to flip the art, right? They're not speculators. I bought a Picasso so I could sell the Picasso, right? They wanted to buy them all. That's why they call them collectors. So if something is deemed to be really valuable, you bought $1 billion of it, and your goal is to buy another $1 billion of it. And so if you think about all these things, which thing in the crypto ecosystem is that, right? Bitcoin is that, right? I bought a bunch of Bitcoin. My goal is to buy more Bitcoin, right? It's just a very simple acid test. Do you have an exit strategy, or is that the exit strategy?
What does a $42 billion buying spree mean for the future of Bitcoin? Well, it's not just about adding more Bitcoins to the company's treasury. It's a move designed to establish MicroStrategy as the flagship Bitcoin treasury company. The plan is to raise $42 billion through a combination of new stock offerings and convertible debt. This amount would add 3% of the total Bitcoin in circulation, creating a seismic shift in the market.
But we're also getting a lot of very constructive support from Wall Street. BlackRock has been a very, very strong voice articulating the Bitcoin value proposition. And of course, MicroStrategy on October 30th announced that we were going to raise $42 billion to buy Bitcoin. And that's the same as saying we're going to buy every Bitcoin mine for the next 3 years at $85,000 or more Bitcoin. So there's a lot of bullish things going on in the market right now.
This move is emblematic of Saylor's conviction that Bitcoin is in the middle of a gold rush, a once-in-a-lifetime opportunity that could reshape financial systems across the globe. While MicroStrategy is already the world's largest corporate holder of Bitcoin, this plan will double their holdings, and with Bitcoin's price on the rise, Saylor is betting big on the cryptocurrency's future. Some even believe that these moves could spark a massive Bitcoin rally over the next several years, especially if other companies begin to follow suit.
The metaphor, when he talked about a possible CBDC, if you think about the Great Depression in 1929, people started running for gold a little bit like now. Cohn Loeb and JP Morgan, maybe the BlackRock and State Street at the time started accumulating gold, and they allowed gold to go up in price, the regulators did. And then there was a swap, essentially, where gold was banned, but you were able to exchange it for paper money. And a lot of conversations, and I think this is where Mario is going on the CBDC, is that the accumulation of Bitcoin by major banks right now, BlackRock, being the great example, will eventually get to be where the majority of Bitcoin is going to be controlled by a lot of these large institutions.
Saylor's massive Bitcoin buying spree has already caught the attention of other companies looking to capitalize on Bitcoin's upward momentum. For example, Semler Scientific, a medical device company, has shifted its focus toward acquiring Bitcoin, positioning itself as another Bitcoin treasury company. Similarly, Mara Holdings, the largest publicly traded Bitcoin mining company, has stated that it plans to expand its Bitcoin reserves.
Well, I mean, it's a good question. In the broader context, you have to think about the differentiated risks. Bitcoin itself really is an underlying commodity or trades like a commodity. So the risk there is price risk. It's based on pure supply and demand. If you look at proxies for Bitcoin, so equities, in this case, we're talking about Mara, which is one of the premier Bitcoin miners out there. There's not just price risk, but there's also the earnings yield risk that you have to consider. And if you look at the two together over the last year to date, you'll actually see that Bitcoin is up about 80% on a year-to-date basis, and Mara is barely positive. It's about 5 or 6% to the upside. The reason being is because we have to contend with negative earnings, which does depress the stock price, irrespective of the underlying commodity in which you're selling.
But why are these companies so eager to accumulate Bitcoin? The answer is simple. As Bitcoin's price continues to rise, holding Bitcoin is becoming an increasingly lucrative proposition. For these companies, investing in Bitcoin is not just a hedge against inflation, it's a strategy to increase their financial standing in an economy that's rapidly embracing the digital currency. The concept of Bitcoin yield is guiding this strategy, which looks at the percentage change in Bitcoin holdings relative to the number of outstanding shares. With Bitcoin's price trending upwards, more and more companies see Bitcoin as a high-return asset, and the race to accumulate as much of it as possible is on.
If I have $1 million in Bitcoin or $1 million in a house, they're both capital assets. I see a world where you can sell your house or you can rent the house. And you're contemplating a world where you're not allowed, where it's illegal to rent the house and no one will ever rent the house. And I'm saying it's ridiculous to take the position that you can't rent the asset.
Now, when we think about the future of Bitcoin, we're looking at a time when the world's currency is completely restructured. The idea of a Bitcoin standard is not as far-fetched as it may seem. Imagine a world 50 years from now where Bitcoin is not just a store of value, but the backbone of every economy. Bitcoin's market cap could hit a staggering $450 trillion, and each Bitcoin could be worth a jaw-dropping $50 million per coin. That's the scale we're talking about. But what does that mean for the currency of the country you live in? Well, it's likely that your national currency will be pegged to Bitcoin, and this won't just be some abstract idea in the background, it will be a fully integrated system.
So I want to talk about, obviously, this title here, 450 billion will flood into crypto ETFs. That's coming from Bernstein. I misquoted at the beginning. I think I said 100 billion accidentally in the next year in the intro there, but they were talking about the next 18 to 24 months as you dig into this. But effectively saying that this is going to grow to a $450 billion market over the next couple of years.
But here's where things get interesting. While the idea of a Bitcoin-backed national currency sounds promising, there's a darker reality lurking. Someone, someday, might try to depeg the currency from Bitcoin, just as governments have historically played with their monetary systems. But here's the thing. Even if they manage to separate their national currency from Bitcoin, they won't get rid of Bitcoin itself. It's too powerful, too integral, and the market has already set it in motion. Bitcoin is here to stay, and its value will only rise as more and more people, individuals, businesses, governments, embrace it.
The United States was built by purchasing Manhattan, then we purchased the Louisiana Territory, then we purchased California and acquired Texas, and then we bought Alaska. The next great frontier is cyberspace, and the obvious thing to do is to own cyberspace, buy the future. And so I think it's a great idea. I think it will happen. And I think it's important to the United States because it cements the United States' control over the future world reserve capital network. Senator Lummis's bill will offset $16 trillion of our debt, according to my models right now. So I think it's economically wise, it's technically wise. And again, Bitcoin is manifest destiny for the United States.
Now let's shift focus to a cryptocurrency that many people aren't talking about enough. XRP. You've probably heard of it, but are you really paying attention to its potential? Let's dive deep into why holding XRP is more important than ever. Michael Saylor, a big name in the Bitcoin world, has been vocal about Bitcoin's future, and his insights provide valuable context for understanding why we should also look to other cryptocurrencies, especially XRP. Saylor's been a strong advocate for Bitcoin's future dominance in the financial space. He's predicted massive growth for Bitcoin, but at the same time, he's aware that other cryptocurrencies will also begin to take on more significant roles as global adoption spreads.
Right? I mean, the Bitcoin position would be Bitcoin is an ethical commodity. All of these other altcoins are unregistered securities. They're all just equity tokens issued by a company in order to get around going public, and they're committing securities fraud.
Ethereum included.
Of course, especially Ethereum. You know, Ethereum's got $20 billion of ETH token locked up in the staking contract right now, and there's a couple of people that may or may not give it back to you ever. Now, isn't that the definition of investment contract?
Bitcoin is already an incredible force in the world of finance. As of now, it's a $1.3 trillion asset, about 100 times the size of most individual cryptocurrencies. The key point here is that Bitcoin has already surpassed the critical threshold that makes it a viable asset class for institutions. This is no longer the Wild West of crypto, it's regulated. In fact, Bitcoin has been regulated by the IRS since 2014. They categorized it as property, meaning that any transactions you make with Bitcoin are subject to capital gains tax, just like stocks. And that's a huge sign of legitimacy.
In terms of being regulated, it is regulated, right? The IRS regulated in 2014 by saying it's property, you have to pay tax on it when you sell it. And it's regulated via these ETFs. So if you're an institution and by charter you have to own securities via a regulated custodian or via a regulated bank, you're buying FBTC or you're buying IBIT. Just like the SEC just approved options trading, but only on IBIT. So there are regulations. The regulations solve the issue of custody. They solved the issue of compliance. And that's why these spot Bitcoin ETFs are the most successful ETFs in the history of Wall Street.
From there, things have only gotten more official. The launch of Bitcoin ETFs, exchange-traded funds, has allowed institutional investors to buy and sell Bitcoin in a regulated environment. This is huge because once you have institutions like BlackRock and public companies like MicroStrategy buying Bitcoin, it sends a signal to the market. Bitcoin is no longer a fringe asset, it's an accepted, legitimate form of digital capital. These regulated ETFs are seeing massive inflows of traditional capital, and that means Bitcoin's future is all but secured.
Yeah, if you're investing in the ETF, you're getting one-for-one performance, paying 25 basis point fee, no yield. When we issue a $1 billion convertible bond paying 1% interest, we're capturing a 50% premium or 50% type BTC yield on that up front, and then we capture another yield on the back end. So if what you wanted was a sort of a tax-deferred yield on your asset, or you wanted to tap into the convertible bond market.
But this is just the beginning. We've seen endorsements from major players in the financial world, people like Gary Gensler, Jerome Powell, Christine Lagarde, and Janet Yellen, all acknowledging Bitcoin as a legitimate asset. In fact, in 2020, these regulatory bodies started classifying Bitcoin as a speculative asset rather than a currency. The key distinction is that Bitcoin isn't just a currency, it's digital capital. You can own Bitcoin, store it, and trade it just like stocks or real estate.
We'll keep adding Bitcoin. It's like asking, if you were asking, a real estate developer in the middle of New York City, oh, you own like 8 blocks of New York City.
When do you stop? Right.
When do you stop? They answered, well, we're going to buy the 9th block here when we can put together the financing, and then the 10th. And if you said, well, when are you going to divest from New York City? The answer is, if you talk to New Yorkers, there's nowhere better than New York City. So they're going to keep building. And when they can't build out, they're going to build up, right?
The broader crypto space is still going through a regulatory gray zone, but Bitcoin has already crossed that chasm. If you look at what's happened between 2020 and now, Bitcoin has been fully integrated into the financial system. And it's not just Bitcoin. Other cryptocurrencies like Ethereum and XRP are also on the verge of becoming major players in the global economy. But let's focus on XRP for a moment because it's going to play a pivotal role in the future of digital finance. XRP has been facing major hurdles, especially in its ongoing legal battle with the SEC. It's been under attack, and its ability to partner with big banks and financial institutions has been severely hindered. But here's where things get interesting. XRP is not going anywhere. In fact, it's only going to become more important as cross-border settlements and the transfer of trillions of dollars in value become more efficient and faster through the XRP ledger.
The XRP ledger, or XRPL, is a decentralized, permissionless, open-source blockchain that anybody can contribute to, develop on, and transact on. Development of the ledger began in 2011 by 3 Bitcoin developers who understood the benefits of Bitcoin but wanted something more efficient, scalable, and sustainable. So they built in some key benefits from the start. Fast confirmation in 3 to 5 seconds. Low transaction fees, typically under 1 cent. And a fairness advantage, which means that no single participant decides which transactions take priority.
XRP isn't just some altcoin floating in the background. It has a clear use case that's about to explode. The global payments market is in the trillions of dollars every year, and XRP is positioned to dominate this space with its fast, efficient, and secure ledger. If it can break through the regulatory barriers and successfully implement its cross-border payment solutions, we could see XRP's price appreciate to levels we can't even imagine today. This is where we need to pay attention. XRP's potential is huge, and with the upcoming changes in the regulatory landscape, it's on the verge of a major breakthrough. And that's why it's time to start accumulating XRP before its price goes parabolic. If you've been waiting for the right moment, that moment is now. As of today, XRP is still at a relatively low price compared to where it could be once the legal battles are over and the adoption curve begins in full force. So what happens if JD Vance, the incoming VP, follows through on his promise to throw out the SEC's case against XRP? Well, if that happens, we could see XRP take off in a way that makes previous price surges look like nothing. This is a pivotal moment for the crypto market, and XRP's price will likely explode once the regulatory uncertainty is cleared. If you're not buying XRP now, you might regret it later.
Cryptocurrencies are surging this morning, with Bitcoin popping 6% by noon Eastern. Ether is also rising alongside Bitcoin, gaining nearly 4%. And Ripple's native XRP token climbed a whopping 22% after the company was hit with $125 million in penalties in its case with the SEC. Now, that figure is a fraction of what the agency was seeking in its legal battle with Ripple.
Trump's newfound support for Bitcoin could be a game changer. While he was once skeptical of the cryptocurrency, labeling it a volatile and speculative asset, his stance has since evolved. During his campaign, Trump voiced support for creating a crypto-friendly regulatory framework if he were to return to office, a move that could bolster investor confidence and legitimize Bitcoin on the global stage. Trump's endorsement isn't just lip service. His administration has already expressed plans to enact crypto-friendly regulations that prioritize innovation over restrictive policies. At the Bitcoin 2024 conference, he made headlines by stating that future regulations would be shaped by people who love the industry, signaling a shift away from prior administrations that were more critical of digital currencies. Moreover, Trump's decision to launch his own family's crypto platform, World Liberty Financial, is a clear sign of his shifting view on cryptocurrencies. His public embrace of Bitcoin, alongside his promise to end Kamala's war on crypto, positions him as an ally of the crypto community, a shift that many believe could propel Bitcoin's price even higher, especially as market sentiment grows more favorable toward regulatory clarity. The time to act is now. The future of Bitcoin and XRP is unfolding before our eyes, and we're on the edge of something massive. It's time to make sure you're part of the future of finance. Saylor's bold predictions and Bitcoin's skyrocketing potential raise a big question. Will the cryptocurrency revolution continue to gain momentum, or is this surge just another fleeting wave? What do you think about Bitcoin's future? Let us know in the comments.